Alright guys, it is May 3rd, it's about 2 o'clock p.m. Eastern Standard Time, and we're going to go ahead and jump right into it, okay? So this week has been pretty tumultuous, as we spoke about last weekend on Saturday. It's just a quick update for how things are looking and how things are going, and what I would, keep my eyes on. Again, this is not investing advice, this is just me just shooting the shit and see where this goes. Alright, so as I spoke about last weekend, we saw a lot of sideways action this past week in the SPY, the mother of all products. Lots of big earnings this past week. We saw Amazon report, we saw Apple report, and that, Apple, they killed earnings the other day, which is why the market rallied significantly. But as I spoke about last video, I'm really paying attention to that 50-day moving average. I would like to see it close above this for at least a couple of days before I start really thinking that, hey, it is a safe, perhaps, time to be a little more bullish overall on your portfolio. And as I spoke about, I was dollar cost averaging my way down around different points of entry on select stocks, such as the TQQQ, SOXL, and I picked up a pretty big lot of shares on NVidia, and we saw that AMD reported earnings as well. They didn't do too hot, but there's still a pretty positive outlook for their accelerators, which they're working on, which, according to friends, really family that I have in that particular industry, they think that by Q4 we might be seeing a significant rally in that particular stock, as the industry begins to gain a need for their accelerating hardware in comparison to what NVidia is making. As you might know or may not know, AMD is basically, second in the running behind NVIDIA when it comes to AI generative hardware, the stuff necessary for churning out all those fucking things that everybody's doing nowadays in their companies. So 50-day moving average right now on the daily is sitting right around 511. As you can see, we are right there. When we talk about expected moves for the week based on options pricing data, let's go ahead and pull that up, okay? Here we go. And as you can see, this past week, right, we dipped right to that lower edge of the expected move at least a couple of times, exceeded it by a few points, but largely we stood around there, as in terms of like how far we dipped down, right? And that speaks volumes in terms of how efficient the pricing data was for this past week based off options. So to talk about how to and explaining a little bit more, I was asking some buddies like what they thought of the video, and I do have a partner in this endeavor, and we're going to try to churn out more informational stuff in the future, in VTube format, hopefully, which is going to be fucking hilarious, and we hope you guys enjoy that stuff. But if you look at the options table, by the way, the program that I use to trade is Think or Swim, which is through TD Ameritrade, which just got bought out by Charles Schwab. You can open a Charles Schwab account and you'll get access to this lovely trading platform. It is for free. This is just something I've been using for years that I've been trading. And when you open up an options table, regardless of the website, you will see, and what you want to pay attention to is the implied volatility, which is basically the way the market is pricing these contracts. It gives you a very good understanding of what's the 68% chance sort of standard deviation that something's going to move within, right? So probability analysis of SPY by the expiration date coming up of next Friday, which is May 10th. If you look at this, May 10th, okay, you put your cursor right over here, you can see the lower edge, right? That 68% probability range is sitting right around here between like a lower edge of about, like 503 all the way upwards of like, what is that? Like closer to like 515, 517, right? And based on this, you can project it out depending on where the market closes today. Of course, this is subject to fluctuate until the market closes, and I mean after hours as well, which is like 8 p.m., okay? You can see right now it's pricing in 518 to 505 of a low next week, right? And we saw this week it hit that lower edge already of 501 basically, right? And actually exceeded, and then it bounced right back. So that's kind of how I gauge whether to enter trades or not, because I look for these key Fibonacci levels, and I look for, of course, the expected move for that particular week on the SPY, because this is the mother of all products. It has the best holding of the biggest companies in the United States, and of course the NASDAQ too. You can look at the NASDAQ. It went ahead and grazed that lower edge of the expected move, just like the SPY exceeded it and bounced right back. And this is where we're at today, 435 on the triple Q, and about 500, close to 512 now on the SPY. And it is because of the fact that Apple beat earnings, and it was wonderful. And the market's at a high right now in terms of the mindset that people have that, oh, okay, maybe the worst is over. Do I think the worst is over? No, I do not. I think that there is a strong possibility that we will have not strong possibility, but there is a possibility that we may see another retraction next week, which is why I'm still holding some bear positions in my account. But overall, definitely, I am more on the bullish end. I think that long term, over the next year, we eventually will see rate cuts by the end of the year. As I showed last time, the CME Watch tool, we're pricing in a rate cut right around November. Majority of the market thinks, and of course that can change, but Jerome Powell during the Fed meeting on Wednesday, he kind of gave a slightly more dovish takeaway in terms of sort of what his projections are and how inflation is cooling off. We saw that jobs report come in today where it was 175,000 non-farm payroll reported. Estimated or expected was around 235,000, I think. So definitely we added less jobs this past month of March to April, which is good for the market because less jobs mean inflation's cooling off, and that is a sign for the better. But something I would still keep my eye on is the dollar, okay, which is falling, which is good for the market. It's falling hardcore, which is great. And then your bonds, right? Where are the prices of the bonds? They're starting to come back up, which is excellent. That's good news. But is the worst over? No, we can see that there's a very clear trend of it still going downwards. The Japanese yen was falling like crazy, but the Japanese government is intervening. Their treasury's injecting liquidity. They're literally buying up their fucking bonds to stabilize the currency right now. Their own bonds to stabilize the currency from falling further. You can look at the, here, let's pull up the Forex for Japan. You can really pull up anybody compared to the Japanese yen, and you can see that every single currency is going up against it rapidly because of the fact that the Japanese yen is weakening tremendously. They have to raise interest rates over there, but they don't want to. And they haven't for, I think, I don't know how many years now, I'm pretty sure. And instead, they're trying to stabilize by buying bonds. So, I believe. So you can see that the DXY hit this lower edge today on the, 50-day moving average and bounced right up. So is the worst over? I don't really think so. I would tread carefully still, make sure that you are, not putting all your eggs into one basket from the get-go. But some positions that I added this past week was right around the low of NVidia, around 217, 218, dipped down to 212 this past week, I think actually. 812 this past week. I was adding around here, and I really recommend you guys keep an eye on this stock in particular because they're probably going to kill earnings. I could be wrong, but they are at the forefront of the AI infrastructure, okay? Everybody's using their shit. So, that's your market recap. Next week could be tumultuous. Could we see the ship rocking a little bit? Absolutely. If we can't, personally what I think is stay closing above this 50-day moving average for at least a few days, right? And of course, if we dip back down, you'll have those bear positions put on, so you'll be ready for that, and you can just continue dollar cost averaging your way in. Was this the lowest that we saw? I think it might be that we saw just, 2 weeks back, because of the fact that if you compare it back to how the stock performed in October, which I referenced last time, when everybody was at a standstill and everyone was confused as fuck because we had that war breakout between Israel and Palestine on October 7th. Unfortunately, the market was at a low during that time. Dollar was strengthening like crazy. Bonds were falling like crazy. The prices of bonds, interest rates were going very high. But, this is just one take. Could be wrong. Best of luck to all y'all guys.